Nearly this entire year, there's been discussion around why MSTR trades at a premium to its underlying Bitcoin. Some people think that MSTR is a de facto ETF that should always trade at a NAV of 1. And some people think that MSTR is a Bitcoin treasury company that sells a variety of securitized Bitcoin products to many different investors and uses cheap leverage to buy even more Bitcoin. It is two very different company narratives, but which is the correct way to frame it? I personally tend to lean toward the latter. MSTR is a Bitcoin treasury company that has the potential to trade for more than the Bitcoin it holds on its balance sheet. To explain why this is the case, let's look back at a concept of contango during the 2021 bull market. What is contango? Well, contango is a situation where the futures price of a commodity is higher than the spot price. This means that if Bitcoin is trading at $100,000 today, then the March 2025 Bitcoin futures contract might be trading at $110,000. Back in 2021, this confused many people. Why would someone be willing to pay $110,000 for Bitcoin in March of 2025 when they could buy it today for $100,000? The answer is actually simple. People want to leverage long Bitcoin, and futures enable people to leverage long Bitcoin fairly easily. This is the 10x long Bitcoin on BitMEX, Binance, or your favorite crypto exchange. The premium exists because nobody wants to short Bitcoin when it's in a bull market. So there's an imbalance in the market, creating a natural premium on these future contracts. However, there's an interesting arbitrage opportunity here. If you're an institution or an individual interested in USD yield, you can perform a delta neutral trade, meaning a trade that isn't betting on the price of Bitcoin to go any specific way, and make a very low risk yield. What institutions do is simply buy spot Bitcoin for $100,000 and sell a futures contract for $110,000. As long as they are both held to maturity, you can make $10,000 or 10% on the trade. And many funds are doing this at scale today. Annualized yields on this Bitcoin contango trade are currently at about 14%, significantly higher than the rate paid on holding T-bills. Now, the whole reason I'm bringing this up is because MSTR works in a very similar manner. Saylor says MSTR equity targets a 1.5x or 2x Bitcoin position. Obviously, it's not a perfect analogy, but the entire strategy revolves around borrowing money at close to 0% interest rates and buying Bitcoin, i.e., creating a leveraged Bitcoin position. And just like contango in the Bitcoin futures market, MSTR trades at a premium to its underlying Bitcoin because there is significant market demand to go leverage long Bitcoin. That's exactly why both of these premiums exist. The world is actively monetizing Bitcoin from zero, and the best trade of the last 15 years has been to simply buy and hold Bitcoin, which means the aggressive best trade has been to do this with leverage. Thanks for watching, everyone, and see you next time.